VINCENZO'S Gold Crypto Investing, where you like, subscribe, and share for a one-of-a-kind company-made computer software trading probability-based trading alert, technical analysis, and company philosophy, as I'm your most trusted source for blockchain technology and cryptocurrency breaking news and coin updates here on YouTube and in the cryptocurrency sphere, as old Vincenzo has brought back truth and, most importantly, integrity back into the trading sphere, right? And as you can see, it's a lazy Sunday at home in the great state of Michigan. You can see the program director, Tiny. See him? He's just taking it easy. Take it easy. Take it easy. The program director is just taking it easy, right? The old Tiny's just taking it easy today. He had a long drive the other day of 420 miles to get home on this midsummer, approaching late summer, if you can believe that already, right? But here's some news I wanted to talk about. You can see some on-chain analysis. Long-term Bitcoin holders did not sell among this Bitcoin crash. Long-term Bitcoin holders have not disposed of their holdings into the market weakness, as short-term speculators are mainly responsible for the heavy selling that exacerbates the asset's nosedive, according to Coinbase latest monthly report. You can see the elusive bottom. The report looked into the overall market conditions in June as the primary cryptocurrency revealed signs that it was near a bottom. According to on-chain data, holders who have held Bitcoin for more than 6 months still accounted for 77% of the 21 million Bitcoins, right? So that's to me, what that tells me is we haven't had capitulation yet. You're going to see, and they're calling long-term holders now of 6 months or more. To me, that's a short-term holder. A long-term holder would be somebody that's been in here for 5-10 years, right? Not 6 months or more. To me, it'd be 3 to 4 years or more would be the long-term holders. But that just shows me, because everyone from 6 months ago that bought, they bought at the top, right? But to me, until you see that number skyrocket down where they're selling, or skyrocket up where they're selling, to me, you haven't had capitulation yet. The report argued that CeFi lenders drastically increased their short-term debts when the bull market was in ring, which is true. They all took on debt, and now they're all coming unglued. But this is just something I wanted to let you see. Compounding the ongoing credit crises, public listed miners who had taken huge loans secured by Bitcoin holding of miners. Like I've been telling you, we're going to have miner capitulation this year too. Machines during the bull market were compelled to sell their positions amid falling asset prices. However, since the top 28 public mining companies only represent 20% of the Bitcoin hash rate, their sales will not drastically affect the trading volume. Even if Bitcoin price were to go to 10,000, as you know, old Vincenzo thinks we're going to bottom out below 10,000, they would need to liquidate 16 Bitcoin from their reserves to pay gap every day. I've been talking about that the last few weeks now. If they have say in Michigan, say it costs them $24,000 to mine a Bitcoin, they need to sell that Bitcoin and the Bitcoin price to be at 24,000 to break even. If the price of Bitcoin is at 15,000, they would have to sell additional Bitcoins that they hold to make up the difference. And that's what they're talking about, the gap. It's like having gap car insurance. If you buy a car for 50 grand, don't put any money down, drive it off the lot, and a month later the car's only worth 45 grand and you total it, you're going to be out 5 grand, right? So you'd need gap insurance to cover that 45 to 50,000 in case your car was totaled, right? So you wouldn't be stuck with a loan because you're in negative equity. And that's what these people are going to have to do. And I've been expressing this as that's going to accelerate the downturn in Bitcoin when these miners have to keep selling Bitcoins that they have in their vault, that they have off-chain, that they're not wanting to sell right now, that they're accumulating and wanting to sell when the price is higher. But if they have to sell the price now because it costs them 20,000 to mine and the price of Bitcoin's at 13, they're mining 7,000 for every Bitcoin they mine. That means they have to unload some of the Bitcoin that they mine when the price was lower, that they were trying to keep to sell into the future when the price was higher. And that accelerates sell pressure, that dumps more quantity of coins onto the open market, which drives the price down lower, and it's a feedback on itself, right? So that's something we got to keep paying attention to. In contents, the Fed committed to raising interest rates to fight rampant inflation. Investors tend to withdraw capital from DeFi protocols to seek higher yield from traditional finances. The impact is shown in the decline of the total market cap of stablecoins, dropping from 162 billion in early May to 149 billion at the end of June. That is a substantial drop. 12.6 billion of capital may have left the crypto ecosystem due to case for a higher yield, considering the CPI index for June at 9.1%, much above the Wall Street expectations. The Fed is set to follow another 0.75 or three-quarter basis hike this month. As such, stablecoins outflow is expected to rise accordingly, right? So that's some breaking news. All right there. Market cap eyes 1 trillion. Bitcoin taps weekly highs. Ethereum Classic explodes 33%. Bitcoin bearish signals. CEL token seen making a recovery despite Celsius going bankrupt. If you're buying a Celsius token thinking it's going back to the moon, they just went bankrupt. That coin's going to zero. It's just short-term speculators trying to swing trade from near zero to just above zero before it goes back to zero. I would not be buying and holding that. If you're trying to swing trade it, I'd be making it less than a 24-hour hold. BitMix explains why Ethereum has more dabs than Bitcoin. Bitcoin rejects at 21,000, right? So that's just some of the news. And you can see today the Bitcoin price is actually got rejected. As you do know, we're in this rising channel or a bear flag, right? If we zoom out to the 4-hour time frame, you can see we've had 3 consecutive bear flags coming off our mountain double top that we had back here, double top 1. And this is where the bear market, right? I went over this extensively. I'm not going to go over it again. This was the first run up, right? From 32,000 all the way to 64, 65. And this is right here when old Vincenzo told you the multi-year bear market started as soon as you broke that rising wedge, because old Vincenzo started making videos back into here somewhere, right? And started gaining a little bit of steam here where people started seeing my videos and all the hype that was going on. Nobody wanted to believe what old Vincenzo was saying. But I told you when it broke that major uptrend and confirmed a breakout, like you can see, you had a power move down, right? And this from the peak to the first bottom was a 20% dump, right? That was a big dump, and that was a market signal telling you something, and you had increase in volume right there. And then as we came back up to the 200-day, just below the former lower support that was upper resistance and got rejected, and that confirmed a breakdown. Then we had a nice run up at a local double top that got everybody bullish again, right? And if you extended this line out farther, it almost came back up and hit that. It was another back test and rejection. And then the bear market really got going right from this point on. When you broke down the secondary fall, that's really where the bear market took effect. And you can see from that point on, you just had essentially a straight drop to the downside, and you went down 43%. But this area right here, when you broke this rising wedge, old Vincenzo told you a multi-year bear market started. Then you bottomed out in a falling wedge that broke bullish, which they often do. But I thought where you would get rejected would have been back up here at upper resistance. So I thought this was going to be your top. But as often is the case, the market does what nobody expects it to do and overachieves what you think it might do. And then it had one final push up, and then that formed your mountain double top, which if you take the mountain double top that I've done extensively, and you break that down to a targeted move, that brings you to 13,336. And then we had our first fall of about 40%. Then we had a big bear flag. And if you did the targeted move from the top of the second mountain double top to the bottom of the flagpole to the point of a breakout, that got you to $20,000, which was a midway point or a 3/4 point between where we started and the mountain double top in the multi-year bear market to where we're going, at $13,000 to make that targeted move. Then we had a nice fall from there, had another miniature bear flag that formed. Then we hit our targeted move down into our third bear flag that we're at now. So what you're going to be playing is support and resistance. Right now, you might be coming back down to retest before the futures market opens is 19,800 to 20,000. And that could be a buy zone if you think it's going to continue to buy support, sell resistance, buy support, sell resistance, until I believe this is ultimately going to break to the downside. Could you pump up a little bit up into these ranges that we've been watching for several weeks? Yes. Is that likely? Nah. What's more likely is eventually you just have these nice power moves and power dumps in this consolidation, and then I think you break down, and then that next target's going to bring you to 13,336, and then we might have to watch out for some kind of a bounce from down there, substantial bounce, more than just these consolidation bounces, right? It's people that are calling for a $42,000 right now, they are out of their minds. It's not going to happen, right? We got much more downside before you revisit anything like 46,000, right? And you can see what they're talking about. They're calling the Bitcoin price as a big falling wedge. But that's not no falling wedge. You could say it's a falling channel, but that just doesn't fit the micro view, right? It does not fit the overall pattern and where the coins are going. You're not just going to get a 120% pump from 20,000 to 48,000 with all the bearish sentiment, all these lending firms going bankrupt, and all these people, mostly retail, losing billions and billions and billions of dollars. There's not enough buying to make that happen in this overall environment and the state of the equity market right now when you're losing. And it's not just losses, it's destroying that money out of crypto. That money, where's that money that's the billions of dollars in these sites being lost by traders going to come back from? And a lot of this pump was margin. Right, so you're not going to get up to 48,000 right now. If you're going to hit 48,000 again in the future, it's not going to be for quite some time. And you have lots and lots of bearish action to go with pumps in between. Because if you look at the weekly, the volume, it just continues to fall. Look at this. And the only real big volume you get since really back here in 2018, the volume's steadily decreasing, right? You got the mean of the volume that started to rise with the price rising, but now even that's the mean's starting to trend back down. But when you start to get more volume pump, it's all sell pressure, right? Anytime you get, and especially recently, look at this. Recently, all this new volume that's starting to tick in white, the mean of the volume to try to move it up, is all sell pressure. It's all sell action, and that's not going to push the price up. That's that volume increasing. Volume increase is only good if it's buying volume. If it's sell volume, that means the price is going to come down. And you can see the price is still going to come down. And you can see our targeted move from there, where we're halfway there, and we're in another bear flag. And look at all these sell pressures. We've had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 straight weeks. And the weekly candles close bearish. 14 in a row. That is the first time in Bitcoin history, I believe, you've ever had 14 straight weeks. Because back here, you only had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. And that was probably a record, right? And back here, you had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So you had 11 and 11. This is a historic run in Bitcoin of 14 straight weekly candles closing bearish, right? It has never happened in the history of crypto and Bitcoin. And before that, too, you've had 22 weeks in a row, 11 consecutive weeks of dumping, and now you've had 14 straight weeks, and I don't see any reason why this won't make 15. And that is the most in Bitcoin history. And you can see the only uptick in volume in the weeklies over the last several months to a year and a half. It's sell volume, and that's very bearish. And you guys need to be concerned about that. If we look at XRP, you can see we've had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, and we're working on our week 15. Right now, we've had 14 straight weeks of weekly closes, and you can see we've had a lot of weekly close. It's been very bearish recently, and we still have that 20-cent target or 19-cent target. But if we zoom out or zoom in, and I always start from the far out time frame and work my way in to make it super simple and easy to trade this manipulated market, right? And you can see now you're coming up to the 50-day moving average in the daily time frame, and that's acted as resistance and resistance. And now we're coming back up to it, and we're going to see if it can power through and make a nice substantial run up to 43, 44 cents, or if we're going to get rejected and we're playing this pattern and we're about to come back down to lower support where we have this white support box, because you can see it's got supported on wicks, supported, but every time it comes up here, it gets rejected. So you got to watch what happens with this 50-day moving average today, right about the 37 cents, right? Right in there, 36, 37 cents. As it get rejected, if it does, you're coming back to the 30, 31 cent level in this white support zone. So that's what we're watching out for in XLP or XRP, XLM, and our initial morning update. You can see we're still trading down and sideways. And to me, it looks like you're about to come back down. That's what it's been doing. You come up and come down, then come up, then come down, come up, come down, come up, come down. And that's the 50-day moving average. That's just been too much overhead sell pressure and this bearish sentiment. And I think you got to come down and touch this. So I'm hedging that you're coming down to about 9.5 cents and hitting this blue ring next. Like, subscribe, and share to VINCENZO'S Go Crypto Investing. Peace and love. Multiple updates to come.